But you got a fancy fucking mic clipped to your chest. So
Shut
there's
up.
that.
Can you see? Can you see what I'm dealing with here on a daily basis? It is the
Uh,
game that can't shoot straight.
All right, welcome to the short of it on Zeros TV. I'm Tyler Neville. I'm here with Dan David of Wolfpack Research, Carson Block of Muddy Waters, and Freddy Brick of Muddy Waters.
Hey Warren, keep your headphones on, all right?
You got it. You got it. You know, we have a nor'easter here in Pennsylvania, and it's important to keep your ears warm.
All right, on that note, let's jump right in. So, Carson, are we living in a post-truth world? What's your perspective? Are short sellers obsolete right now?
I'll let you know when our performance fee crystallizes. Um, I mean, this has been a really fucked up year, and that's an understatement. But yeah, I felt that each year that I've been doing this, and it's now 10 years, the bar for what matters to investors in terms of how the amount of problems at a company, it just gets higher. Like there's each year I felt that investors were more and more anesthetized to risk. And then we came into 2020 and I thought that these, the chickens had come home to roost. But no, like every, fucked up balance sheet that was too fragile got bailed out. And I don't know. I don't, at least at this moment, I mean, some of the biggest frauds in the world are thriving. I mean, like outright frauds that everybody knows are frauds are just going straight up. Stock promotions that are obvious stock promotions. And yeah, I mean, it's hard not to feel at this moment in time that truth just doesn't fucking matter anymore.
Dan, what do you think on this subject?
That's true. It's I get that the stimulus is a big deal, and we have to have a conversation about the difference between a billion and a trillion, and you throw 3 trillion in liquidity at the market. But it seems like the fraudulent companies or the companies who are never going to make a profit, not forget about being fraudulent, are gaining momentum faster than companies that really deserve market share. It's tough to put your finger on it, but it seems like it's everything's being pushed up. Nobody cares anymore if they're a fraud. I hear analysts these days will say, okay, well, Muddy Waters came out with a report and it's 30% fraud in their revenue. We'll give them a 40% haircut and call it a day. No, it's a fraud. They don't get a 40% haircut. They should go away.
Yeah, but that's not even shit. Like, just give a quick example. GSX. So that actually, its peak market cap was 33 billion over the summer. So I think that's bigger than Wirecard's peak market cap ever was. And GSX is much less of a real business than Wirecard ever was as well. So GSX, I think the ship is taking on water. I think it's going to keel over in Q1 and I believe they know that. So GSX just had a huge earnings miss in Q3, lowered guidance. But when I read these analyst reports, the analyst reports like, well, sales and marketing expense were up, like 200%, from a year earlier, and it's a more competitive environment. Not once in any of the reports did I read did they mention that maybe this valid or critics of the company might see validation for their concerns in these recent numbers. No mention of fraud, which is the single biggest risk factor. If you're long this thing, that's the single biggest thing that can go wrong is you wake up sometime in the next few months and the stock's already down 60, 70% in pre-market because somebody pulled the plug on it. And it's amazing that they don't that the analysts it is and it isn't that they don't pay any homage to this. And I mean that is just like that just shows that at the elite level of society, I mean we're just so used to bending truth, and truth is just the way that it's been operating for so long, but it's in stark relief when you look at GSX.
The analyst thing, like, I wouldn't say this year has been any worse than any of the last like 3 or 5 years in terms of their ability to put their heads in the sand. I think what's really changed this year, and Dan a little bit touched on it with liquidity, is the size of these frauds. I mean, the market caps and the sheer amount of money that these people are able to walk away with dwarfs anything I've ever seen. I mean, you used to get a fraud where these guys were really good. They might be able to get the market cap to $1 billion, and of that, they'd pay themselves some single-digit $1 million a year. They might, through options, own 3 to 5% of the company, and the smart people would be able to walk away with like half of that before the thing blew up. So net on 5 years, you might be walking away with 30, 50 million. The size of the cash outs these people are able to walk away with now, you're talking hundreds and hundreds, if not billions of dollars. And if you look at the likes of Nikola, once you resign, it makes it a lot easier to sell your stock when you're not an officer of the company. So I think the level of sophistication combined with that flow of money has led to enrichment and perverse incentives that have just never really before been seen on this scale. That for me is like what's really changed in the last couple of years, and what's led to where we are today.
Speaking of the buy side, is it collusion or is it just career risk? Like clearly something's going on that's just like completely different than the past cycles, right? What's going on there?
Well, I mean, I guess it depends. I think the most egregious corner of this, and no surprise, it always has been, would be in the China space. So, when we get these China frauds, and what's been happening for years is there was no enforcement in that space. So on the buy side, the people who the smart money in China names are from China. All right. So nobody's going to hire them to work in the US, or nobody's going to pay them if they set up a fund in the US that's investing in Amazon and Netflix, right? Like for them, it's China, ride or die. So it just basically became clear to everybody who has an economic stake in China being deemed investable or not uninvestable, that you have to defend these frauds. And so it's on the sell side, it's on the buy side. These guys will pump these things up. And what's really interesting also that I saw with GSX this year, I mean, in contrast to 10 years ago when we first started shorting these names from China, I mean, back then the Chinese guys were really unsophisticated in the market. And I mean, they were just like deer in the headlights whenever we would short. But now these guys understand the technicalities of trading, I think, better than anybody. And they are so good at fucking with stock prices and just making money intraday. I mean, they're and really defending, squeezing stocks, and they're great at it now. So I think in the China space, I mean, I would call it on some level collusive. Outside of that, I mean, yeah, the guys who used to make 2 and 20 in equity long short are not. I mean, equity long short is basically equity long only, at least if you want to stay in business. Um, I don't know. I mean, that's a tough space. I'm not sure that those guys are doing much more than. I mean, the guys who are winning are obviously the guys who are just like surfing beta.
So speaking of China, I know you guys have strong feelings about the Ant Financial IPO. Can you go to depth there a little bit?
Well, I mean, look, what is Ant Financial? If you look back at their history, it's really the born of Alipay, and Alipay was part of Alibaba. Jack Ma sold it to Yahoo. Decided that he didn't sell it for enough money, and comes back to Yahoo and says, you can't really, a foreign company can't own a payment processor in China, can't be listed, things of this nature. He gives Yahoo basically what he tells them he's going to give them. They don't really have a choice, do they? He takes it back, and as I understand it, he didn't even bring it back into Alibaba. He just had it separate from Alibaba.
I think the facts are worse than that. I mean, my recollection, and I'm not fresh, but this happened in 2011, if I remember correctly, is Alipay was part of Alibaba. Alibaba was not yet public. The largest outside investors were SoftBank and Yahoo. They had board seats. And Jack Ma just took Alipay out from underneath Alibaba, transferred it to himself, basically. And a few months after that happened, that's when Yahoo and SoftBank found out about it. And then he said, well, yeah, China, foreigners aren't allowed to, own, shares in these things. So I did what I had to do for legal reasons. And now I'm going to tell you what I'll pay you, as nuisance money, basically. So that's my recollection of it. But obviously, IPOing it would be inconsistent with that prior view, that foreigners weren't permitted to own a company that owns this.
And it just so happens now that he IPOs it's for what, 200 times, 2,000 times what he paid for it?
Yeah, no, I mean it's
It's
like, and people
ridiculous.
forget that about that guy. That was straight up threat. That was straight up theft. I mean,
It was. It was. And guess what? Nobody cares. Not on
No,
the regulatory side, not on the sell side, not in investment banking. They don't care.
yeah, people were queuing up around the block for that IPO like
They
it was,
were.
the last stock that was ever going to list in history. That's the funny thing. Like, really, no one cares. It was seen as something you had to own, and it's just another stark reminder of how non-real and functioning the Chinese market is. I mean, here you are on the eve of the largest or second largest IPO of the decade, and it's more important for you to score political points, or I think there was also an element of not wanting to take control out of the Chinese banking system hands. I do think alternative credit providers do pose a threat to the hierarchy there. But right on the eve of the world investing in this, you take it away from everyone and you basically do it overnight without any real process in place. Yet at the same time, we have the last 2 years MSCI increasing the weighting of China and all of our money passively, stupidly just pouring into their exchanges. And no one's stopping to think, like, is any of this a good idea?
And now we Kennedy bill. So,
Uh,
according to the SEC, 224 U.S. listed companies are located in countries where there's obstacles to the accounting board. These companies have a combined market cap of more than $1.8 trillion. What are you guys' thoughts on Kennedy bill right now?
well, in all fairness, Alibaba's more than half of that in one company. So thanks to us, yeah, I think the China Hustle Bill's, a good first step. They want to call it the Kennedy Bill. They can go ahead and do that. Great. It's a first step, and they said I think in 2012 with the long top financial fraud and the Deloitte issue that this was going to happen, and we're going to talk it through. And of course, you had the China slow walk for the last 8 years. And what are we going to get out of it? An audit? Okay, but if these companies leave our markets and they go to Hong Kong, and we still have all of this qualified money going to Hong Kong, how does that really hurt them? It only
sure.
really has teeth if we can't invest in these companies in Hong Kong either. And if the MSCI emerging index can't invest in these companies, then it's going to matter. Just
Well,
saying that the auditor can audit the financials. When's the last time one of these fucking guys caught a fraud anyway?
no,
Ever?
Luckin, but I mean, but that
Well,
that
was that a board of director quitting?
no, that was EY finding the fraud. But I mean, you have to appreciate that EY has had, it had a really bad run, which has only continued into this year. Funny enough,
Yeah.
The thing
I
I
mean,
liked actually about EY catching that was they didn't just catch it and notify investors. The first person to be notified once they'd caught the fraud was the company itself. And I think,
Well, that's who they work for.
right,
well,
exactly who they work for, but they basically went to the directors and were like, hey, there's this like payment being funneled outside of the company. Like, what do we do about this?
I mean, they went to the directors. They're like, a lot of the revenue is fake. Turns out these companies that are basically, they're not real companies. They're controlled by the chairman, Charles Liu. Yeah, that's fake revenue. And Charles Liu, I don't know if he was in that meeting or if you heard about it from the other directors, the independent directors. What did he do? He's got like 3 or 4 weeks before this is made public. He fucking transferred out, I think 150 million real dollars that was raised in the offering to, other companies he owns. And meantime, you see that stock going down like 45 degrees for the 3 or 4 week period until it's announced publicly. It's like, like these guys don't play by any fucking rules. I mean, to them, rules are a joke. Anybody who plays by rules and respects rules to them is a joke. And I think that that whole situation just illustrated it perfectly.
They're not even pretending. They're not even pretending to play by the rules.
No, I mean, that's the thing because why should they? Like, nobody can hold these fuckers accountable. And even with that bill, I mean, or so now, it's probably about to become law. I mean, that's fighting the last war. And this is what I've been predicting for years, is that if the US ever made a real issue of it being able to inspect the auditors in China, I mean, China would fight tooth and nail and then say, okay, fine. We give in, knowing that the US, I mean, like that's not really that substantive anyway. And China knows it, and I think they drew that line in the sand to keep the US away from what really is substantive. I mean, none of this matters after you get that section 177 of China's revised securities law that went into effect this March, which prohibits, I mean, it's now black letter law. It prohibits any PRC issuer or individual or other entity from cooperating with an overseas regulator without express permission from the CSRC. So it's basically a license for them to steal. And that one is really the problem. So the whole thing with the audit inspections is a red herring because they've got that 177, which basically took, what was rumored to be a prohibition regarding state secrets and codified it into a big fat fucking middle finger at the US.
But this law would run in direct contradiction of that. Something's going to have to
No,
change
no, I mean, because
between the two.
Article 177 is not addressed by this law. It's just give us inspections of the auditors, which, again, like, I mean, in a place where, so many people are cheating on so many things, what, you think like inspecting the auditors is going to be any different?
No.
Yeah, the PCAOB will get fucked with. They'll be jet lagged. They're going to be taken out to get hammered the night before. Like they're, going to be, kind of translation issues. I mean, all sorts of things that are going to make this is an exercise. It's totally fruitless. But China will exhaust our political will to tackle this issue through this process of wrangling inspections. And that to me is the whole point as to why China is fighting it. It is to exhaust our political will.
Fair. So pivoting to the U.S. and the macro distortions we got here, there's so much going on where we're kind of turning into China. We're almost a centrally planned economy. Like Dan brought up, $3 trillion in stimulus. What are the macro distortions you're seeing, and like how crazy is it right now?
Nothing that should go down goes down.
Listen, you have the most important guy on Wall Street's Dave Portnoy. How fucking crazy is it? I don't know. I mean,
So when I interviewed Andrew Left last night, and Andrew's like, dude, Dave Portnoy is the smartest fucking guy in the markets. And Andrew meant it in seriousness.
listen, I don't really think he did. I think I kind of take him at his word that he didn't know what he was doing to some degree. And you say, let's all buy this nano cap that trades by appointment. So, and he's like, oh, look, it's going up.
I don't actually know how big of an effect I have. It's hard to tell smoke and mirrors. It seems like everything that the financial community can't explain, they blame on me. And whenever the stock market's down, they're like, see, he has no effect. So I really can't tell. I don't know how much of an effect I'm having. I just know a lot of people are talking about it. So when I first got involved in the stock market, I was shorting stocks and I was looking at the world and being like, I don't know how things can go up. And I was getting murdered. And then I came to the conclusion or assumption at some point, the stock market was fairly disconnected from the real world, or maybe it just hit the lows. And since I basically adopted the mantra of stocks only go up, I do believe all stocks go up. There's very few. I mean, unless an asteroid hits the world, people will end up above where they started. They've been following me for 4 months because they're so far above where we got in.
Yeah, okay, asshole. It's going to drop tomorrow. It's going to cut in half. And I'm not sure he quite understood that. Like he's gotten away from the nano and micro cap, so it seems like he got more educated there. But if Andrew's point is like, hey, he's smart because this is a way he can make money at the expense of retail investors, then I guess he's right about that. He just,
I mean, look, I don't know. I don't take that. I know you and he had a little bit of a beef earlier this year, but I don't take that view. I think you got to admire that this guy figured it out. Like nothing matters, right? Just the liquidity going into the market matters, and guys telling stories. Like that's all that matters. And he's right. I mean, I grew up around this business, and I didn't realize it then, and I don't think the people who said this really understood the implication of it. But so often, when these professional investors, when I was growing up, were talking about companies, they'd say like, "Oh, it's a great story," or "Yeah, the CFO is great. He can really tell the story." Like that's all. That's all this is right now. It's a market driven by liquidity and stories.
He worked out the fund flow thing before anyone. I mean, the amount of short sellers who I've spoken to this year who are in something that's just like fundamentally totally fucked up, and they seem to not get that, like, hey, this 9 times levered shitco with declining revenue and a product that like no one's going to use for some number of months because of the pandemic fits into a category of stocks that high frequency traders or other market participants want to buy and will stubbornly sit there. And I feel like to a certain extent, like Portnoy kind of worked out that, hey, if he can direct like tens, if not hundreds of millions of dollars of flow at certain things, that it's going to work. And then, you factor in like the day trading and the options market and, the amount of first timers who, because like most of my generation have not really participated in the markets. Like we saw '08, lots of us were like, that looks kind of shitty and a scam. And this is for a lot of people, I think the first time they've really had enough cash in their pockets to put like decent amount to work. Plus you got stimulus checks that everyone got. And he found a way to capture that. And look, man, truth be told, the fact that he doesn't take himself too seriously is somewhat endearing. The amount of like 31-year-old portfolio managers who are putting out 250-page decks on like, some value play crap that no one cares about because they read Joel Greenblatt's book 10 years ago. Like, I don't know. I kind of enjoy like watching his playful banter and the way he interacts with people, and the fact that he knows he has this like train of unsophisticated investors behind him. It's kind of amusing to watch.
Then what happens at the management level? Like clearly, that's just not a retail flow thing. We're getting it from the financial engineering part as well. Like, what about that? I mean, how much of that is attributing to this rally?
Yeah, I mean, given that the world economy was almost brought to its knees this year, and unemployment soared, and we've got a massive bifurcation in society globally. Yeah, and the market's gone up.
all-time highs.
I'd have to pin a lot of it on that.
Well, I think that the other thing that's going on is management have become so attuned to what investors want to hear. So I was reading the other day that management teams are being coached not to use the word "but" on investor calls because the high frequency trading algorithms can actually pick that up in the natural language processing. I think that is like an extreme extension of management teams who know how to guide, or management teams who know how to kind of like let you know the number. So I think what you're seeing here is like, these quality management teams who basically have learned to play the buy side game much more so than they've actually learned how to manage a business. And so, yeah, I think they're totally in on it. The timing on some short theses is entirely based upon when management have like top ticked their LTIP and they're like, okay, they're not interested anymore. Like they've taken the maximum amount of juice they can off the table. Now it's time for them to kitchen sink things or reset, or this person's going to step away because if they can't make 50 million a year, it's really not worth their time to stick around and make single digit $1 million. It's kind of like seen as beneath them to just run a multi-billion-dollar corporation for that. So I think the sophistication of management teams is really driving a lot of this this kind of flow driven investing as well.
And the debt markets just keep financing these pieces of dog shit too, which is just incredible.
Yeah, although I don't know if you caught this ruling recently from Jed Rakoff, and I'm sure this thing will be overturned, but Jed Rakoff held that are in case of one of these private equity, you know, just corpse that they fucked, after death, that the directors could actually be held personally liable for the debts of the company because they were reckless in borrowing so much money, and so that negates the protection of the business judgment rule. Now, like I said, I doubt that stands, and I'm sure if we think that through, there are a lot of situations that like we could agree that actually, it makes, if this thing were to become law, this holding, um, that it would make things, it would have deleterious impact in other areas. But yeah, I mean, on the surface though, this idea that you can't just saddle these companies with debt in order to buy back shares or make stupid acquisitions and destroy value, basically, without having, without being at risk personally, that's actually pretty interesting.
That could change the incentive structure pretty fast. Huh? In private equity, I saw private equity is going to have $330 billion capital raised in 2021,
which is probably just behind the amount of money SPACs are going to raise in 2022.
with Chinese companies doing reverse mergers, right?
Yeah, the reverse merger's back. How exciting.
Yeah, that's the other thing I like about SPACs is when you see PE firms managing, tens of billions of dollars that also need to do a SPAC, typically outside their area of core competence as well. That you got to wonder, like, who is signing up for, fill in the blank PE firm that are well known for their, for their investing acumen in financials, and they're going to go out and buy, like, a lidar company or a cannabis SaaS platform. Like, you gotta wonder, like, at what point anyone thinks that makes sense.
So something did work this year, Penumbra. Tell me about that a little bit.
There's some justice in the world that we see actually, and that is Penumbra is recalling its Jet 7 Extra Flex catheter. This is a device, medical device that has killed people. And in all seriousness, I don't think that recall happens if Gabriel Grego had not shorted this publicly and brought it to everybody's attention. But the twisted aspect of that, and look, this is just opinion, when Gabriel and he came on Zeros to drop that idea, um, company didn't even respond to that initial report. That said, hey, they're killing people, and this is how and why, and this is in the way in which the company is culpable. No response. But last week, Gabriel found that there was an alter ego out there on the internet for one of the co-founders of the company. The real co-founder's name is Arani Bose, and the alter ego is this Antique Bose, and they cut the face of some other dude who's a real estate agent in Orange County, and stuck it in all these images of Antique Bose. And when Gabriel brought that to the market's attention, the company freaked the fuck out and just came back calling them sleazy short seller, and it's just amazing because it's like, oh, you're killing people, and it's like, oh, but this, you set up a fake profile, you motherfuckers. And so, I mean, I think that did so much damage to the company because it really, I mean, at that moment, I was like, wow, this is a jacked management. I mean, to react that way to, I mean, clearly there's something that happened. I mean, there are facts out there in terms of the profile, but to overreact massively to that and not react to the deaths, yeah, that just told me that I mean, there are no adults in the room in management at Penumbra. And so it's great to see that today they announced that recall. And again, I don't think that would have happened this soon, but for the Antique Bose fiasco. If they hadn't shit all over themselves and just drawn all this unwanted attention as a result of their, just, screaming about that, I think that thing would still be out there and, bursting a few brains before it was over.
And the one thing you can count on, sell side came to their defense right away.
Oh, yeah.
Yeah, yeah. And you won't be hearing shit from them about this disclosure.
They're good little hookers on the sell side.
They are.
All right, so moving on to Germany. Is Germany more corrupt than Russia?
Ooh, jeez.
Of course.
You're saying yes.
I mean, look,
You realize he said Russia, right?
you see, here's the thing. I mean, Russia, everybody gets it. Everybody knows that place is corrupt. Okay? They don't pretend otherwise. Germany pretends otherwise. And
Yeah.
we just saw not only the Wirecard thing just gets more and more ridiculous every week. This past weekend, the FT reported that the head of the audit regulator, the man who headed the audit regulator, went long Wirecard
Yeah.
right after KPMG's internal investigation report was produced. Now, fortunately, this guy's a shitty inside trader and he lost money on it. But
Yeah,
I mean, they had all these employees at BaFin, their regulator, who were long Wirecard while it was supposedly being investigated, but really the investigation was of everybody who ever, raised a flag publicly about the company. The fucking audit oversight chairman was long this thing. I mean, what a joke.
Well, and it's ridiculous because they're saying like it's okay though he lost money, so somehow that makes it okay.
No, he actually got fired. This dude got fired, but the head of BaFin, I mean, this is also part of the ridiculous denouement here. The head of BaFin, Felix Hufeld, has not lost his job. And in the aftermath of this, it looks like Germany is going to give BaFin more power, more regulatory authority. I mean, that was literally Hufeld's excuse was, we didn't do anything about Wirecard other than, persecute journalists because we didn't have enough, the scope of our authority was too narrow. So it's like one of the biggest regulatory fuck ups in financial markets in the 21st century turns into a power grab for the guys who fucked that up. Now, that's some pretty off the rails shit. So I would expect that in Russia, but the thing is, everybody would expect that in Russia.
Well, and this came like hot on the heels of what, 2 years ago we had Steinhoff, 3 years ago we had Steinhoff. Like, they probably presided over the two single largest blow-ups in Europe in the past 5 years. Why does anyone give these guys any credit anymore? Why is there a veneer of respectability to anything going on? It sits beneath the surface. It was an open secret that Wirecard was a fraud. All Germans knew it, except the regulators, it seems. That's the crazy thing about it. Like, although it's an open secret and we will joke about it in Russia, at a pretty senior business level, like most people seem to have got that Wirecard was a fraud. It was only like right in the elite circles that they thought it would be a good idea to protect these guys.
They didn't not know. They just didn't care. And that's like Russia, whatever.
Well, look, I think you guys are right, and Germany surprises a lot of people at really how inside they were on this and how they fucked it up. But BaFin went after journalists, right? In Russia, they kind of kill them. So I'm still going to go with Russia.
Okay, but let's see. What did Wirecard do? Wirecard actually sent thugs to like Matt Earl's house.
And how did the company react and respond to you when you flagged your concerns?
Well, very aggressively. So it was effectively a three-pronged approach. One was very aggressive legal action, which they took against me, which didn't actually ever get to court because, unfortunately for them, they couldn't actually particularise their claim. The other aspect of it was that they placed me under surveillance. I've been under surveillance for a long period of time now, as indeed I would have been critical journalists of the company, such as those within the Financial Times. And also I was subject to disinformation that was put out into the internet about myself, and indeed also subject to what was a very sophisticated and targeted cyber hacking attempt to get into my emails. Again, I was not alone in that. So it's been a fairly traumatic 3 or 4 year period for myself and indeed other critics of the company.
They hired a hacking firm, which supposedly we were targeted. I mean, and still, like, those facts were reported, and these fucking guys were like, jetting around. Jan Marsalek, I mean, speaking of Russia, the former COO of Wirecard, was literally working with the FSB in Libya to raise a paramilitary army to control the flow of refugees into Europe. Okay, like,
And where is he now?
Russia, Germany. I feel like Einhorn is Finkel. Like, and it all converged with Wirecard. So yeah, I have a hard time. That's why I call it Moscow on the Main. The Main being the river that runs through Frankfurt.
How do PMs keep holding that, knowing that it's a fraud? And is there any repercussions for those guys?
There's no accountability for it. Who gets fired? Nobody.
They knew it, they just didn't care. It's two different things to know, to know and not know, right? And so if you don't care, you're not going to know.
In fact,
the less you know, the less you're accountable for.
What I love about some of these guys is they actually brag in their like annual letters about these like wonderful contrarian positions they have. Like half the time where you have these large holders of these controversial like total frauds, they're out there bragging in their letters. Like, Wirecard is not the only example. We've seen examples of things that we have been short where fund managers will literally take it out on us in their Christmas letter saying how smart they are, that they're taking the other side of our trades. They don't give a fuck. They're not doing work.
Jim Oberweis Jr. has not done that for 7 years.
Very fair point.
And you do get a Christmas present out of it.
We sent Jim Oberweis Jr. a very considerate, loving Christmas present.
Right. Intimate, really.
Very.
Wrap up 2020 for me and take us into 2021. Where do you guys see the year ending in 2021 for the short selling community?
For my part, it's going to be just as difficult, if not more. I mean, you're always going to have to, have a tier one work, and you're always going to have that situation where somebody who does half the work puts out a half-ass effort, and then you're really behind working on that same idea. Past that, coming into getting out of spring of next year, you're going to have a lot of pent-up demand on people going out there and doing things they couldn't do this last summer and spring. So I think you're going to get a pop coming out of spring, and I think we're going to have a hangover this time next year.
Yeah, I'm in two minds. On one hand, it's exciting because the market caps of complete garbage, empty boxes are well into the billions of dollars, which is obviously an incredible opportunity. The flip side is I don't see us getting to Jan 1 and markets resetting and changing. So I think we're going to continue to face a lot of these same, whether it's ESG flows or, effectively front running from HFT type issues that we faced in 2020. I don't necessarily see that changing, but when it does, it's, there's going to be a very, very small door for that money to flow out of. And, with the pretty much destruction of the active management community, there's going to be very few discerning buyers on the other side of that fund flow. So maybe that'll be 2021. Maybe it won't be anytime this decade. We'll see.
I think next year will be, I think it'll be a better year for short sellers. I mean, that's pretty low bar. I think it might actually be a pretty good year, but it depends on what areas you're talking about here. You're going to continue to see ESG flows. So shorting stuff that's in these indices, that relate to ESG is going to be very difficult. especially the ones that, have the companies that have the largest caps and get the biggest flows. Something Andrew pointed out, Andrew left, he pointed out that he thinks there's going to be a supply demand imbalance, right? There's just so much supply of garbage companies coming on the market, and that that supply is going to exceed the demand for garbage companies. So I agree with that. And we talked about SPACs here. And so SPACs are a symptom of that. And you've got, and I think that could also be kind of the part of the cause of unwind of, shitco renaissance that we see here. So I think you've got that factor. It won't happen immediately, but generally, when you have a Democrat as a president, the SEC is more aggressive, enforcement matters more. I think investors also make that adjustment. They know that when you have a Republican, especially somebody like Trump, they're not expecting much in the way of enforcement. So FCPA will matter more as well under a Democratic president. So I think the enforcement environment will look better. And as people start to get back to work, or as Dan said, go out and do shit, hey man, that's less time to, follow Dave Portnoy and buy his garbage. So I think that you're going to start to see, some of the active flows from the retail trail off, especially as people do get back into the office and they can't just sit there and, trade all day. So I think 21 will be better for guys like us, but check back in a year if I can afford to keep the lights on and zeros here.
Well, guys, on that note, we'll check back in a month and see how things are going. But thanks so much. This is great.
Cool. Thank you.
Thanks.
See you guys.